Hello, everyone, and welcome to the Market Post. Today, we're going to be talking about two major oil companies that are going to make you money in the long run. So, why oil tankers? You might be asking. Well, right now, the tanker industry is a better buy than ever before because of the current situation with oil rates. These rates have dropped to record lows such as -40 a barrel, where essentially you're getting paid $40 to take a barrel of oil. This has never happened before, and this is what's making such media go crazy, and everyone's talking about it. Essentially, this happened because the futures, where investors could invest in the oil at a certain price, these futures expired a couple weeks ago. And basically, it was cheaper for these investors to just pay people to take oil off their hands than to actually fulfill the futures, which is why we saw this dip in price to -40 a barrel. Now, this is causing these oil companies to have major stockpiles of oil. Since no one is driving, there is no need to use gas and have oil on the home front, and this is why there's such a decrease in demand for oil. But once these regulations are lifted and people start to drive again, we expect to see an increase in demand for oil, which brings me to tankers. Tankers are what allow oil companies to transport their oil across seas. So once the demand starts to increase, tanker companies will have the luxury of charging high rates to oil companies that need their service. But the catch is that we've already seen this start to happen. Companies like Euronav, who are charging $150,000 to $200,000 per day for a 50 to 90-day voyage, that's crazy. They are making insane profit compared to what they normally do. So I'm going to be taking a deeper dive into what these rates actually mean for each company. But basically, these high rates are going to bring in a huge amount of revenue that we have not seen before for these tanker companies. On top of this, tankers have started to stockpile oil as well. If you're unfamiliar with this, essentially it allows tankers to buy oil for super cheap prices or get paid $40 to buy the oil, hold it in an off-land tanker in the water, and hold it until these prices start to go up. However long it takes, I don't know, maybe a year, maybe two. But once these go back up, they're going to sell this oil for no risk at all. It's insane. I wish I had millions of dollars to do it. But this allows them to make huge profit risk-free. And now both of these factors are going to play a key role in tankers' upcoming earnings this year. So now let's dive into my two top tanker stocks. The first one I'm going to be talking about is Teekay Tankers Ltd., ticker symbol TNK. Teekay Tankers is a major tanker company that has a large fleet containing Aframax, Suezmax, LR2, and VLCC tankers. In total, they have a fleet of around 54 tankers alone, not even including their carriers. So, similar to some other companies, they are also benefiting from the high rates that they have the luxury of charging right now. And this is one reason that makes them such an attractive stock. TK holds a market cap of $654.6 million, which is on the low end for a company. But, however, compared to competitors in the tanker industry, such as Nordic Tankers, they only have a market cap of $578 million. It shows that TK is a little bit of a stronger company and holds more strength in the industry. TK's financials are what make them another strong oil tanker stock. The past 3 quarters, they have beat their earnings, and we saw a huge increase last quarter, going from -0.64 in quarter 3 to 2.74 in quarter 4, creating a 1.83 increase in 1 quarter alone. Now, their EPS also supports that they are profiting and makes them a strong company. They currently have an earnings per share of 1.23, and this is showing that they are going in the right direction and they're not losing profits like other companies in the industry. On top of this, their upcoming earnings that will be released on May 21st are expected to increase to 2.66, which would be a jump up by 0.62 from last quarter. However, personally, I think that it'll be even higher than this, keeping in mind that they can charge up to $300,000 per day for a 50 to 90 day voyage. Now, this might drop as time go on, but the fact that they can do this compared to the normal price of $15,000 to $20,000 per day is insane. So I really don't think that they're going to have a problem beating their upcoming earning estimate at all. So currently they have an RSI rating of 57, which does show a hold position. However, when using momentum oscillators, analysts do predict that TK will rise on the average to 28 points per share. They've been bouncing up and down. Right now they're around 22 points per share. But analysts predict on the high they can reach 36, and the low they can be around 22, which shows that the company is currently undervalued and trading at a lower price than what is expected, which we can see through the PEG rating of 0.1, showing that they are very, very undervalued right now. Essentially, a PEG ratio takes in the company's earnings and EPS ratio to see if it's over or undervalued. If it's between 0 and 1, it shows that it's undervalued, and TK is at 0.1, which is a very good sign when looking for undervalued companies such as TK. So, combining this with the analyst's prediction of an average share price of $28, this is exactly why I think TK is going to be a strong investment in the upcoming months. So moving on, the second company I have is Euronav. The second stock, known as Euronav, is a major competitor in the tanker industry with a market cap of $2.1 billion, which is significantly higher than TK, but that does not make TK any worse. Now let me explain Euronav. So when compared to its competitors such as Scorpio, who has a market cap of 1.064, or Frontline with 1.7, it's clear that Euronav has more assets on their belt and is generally a much stronger and stable company. Over the last 2 quarters, they have seen a significant increase in earnings, going from negative $110,000 in 2018 to $118,000 in 2019. On top of this, they have also seen an increase in recent quarters, going from negative 0.11 in Q3 to 0.75 in quarter 4. In this upcoming quarter, they are expected to see an increase of 0.11 to 0.86. However, similar to TK, I have a feeling that they're going to beat this because of these rates, and Euronav is also selling some of its older tankers from like 2000, 2001, and they're making profit on this. That's also going to be in the upcoming earnings. So let me go further into that. In a recent interview, Euronav CEO quoted that they are charging around $150,000 to $300,000 per day for a 50 to 90 day trip, as opposed to normal rates, which are around $15,000 to $25,000. The fact that Euronav is able to charge these rates is actually phenomenal. Per trip on the low end, they will make around $7,500,000 up to around $10 million per trip. In one trip, they can make $10 million profit compared to a normal trip, which is $750,000 to $2.25 million. This is a huge increase in profit. This is exactly why I think that they're going to beat their earnings. And now another factor that's going to add to these earnings is that they just sold an older Suezmax, like I was talking about, for $20 million, which is going to add after taxes $13 million to quarter 1 capital gains. On top of this, the investors in equity, the CEO expects his earnings to show a stock increase of up to $30. Now, Euronav is currently trading around 11. I think this is a little bit of a stretch. However, I definitely am very bullish on Euronav, and if they go up to $30, that's a huge $17 increase that I'm a huge fan of. $19 increase, my math's a little off. I'm a huge fan of. I see them going around to 2025, but 30 is even better, obviously. So diving into the technical side of them, their EPS of 0.52 separates them from other tanker stocks because it's a strong indicator that they are making profits and not losing it. While compared to a lot of tankers that are losing profits, such as Scorpio, who has an EPS of negative 0.97, or Nordics of negative 0.073, they're losing profits. And Euronav is staying strong. They've been strong for the past couple of years, and they're getting ahead of these. And this quarter, this year, is only going to help them make more money. Now, their PE is 19.64, which is not the lowest. To be fair, it's not the lowest in the tanker sector. However, it's also not the highest, so it kind of puts them in the middle when saying if they're overvalued or undervalued. So analysts are currently giving Euronav a 1.4 buy rating for the upcoming month. And not only, I don't like to just go off of a buy rating or a rating that Zacks or Yahoo Finance is giving, but this added to everything else I've talked about, I am definitely very bullish on Euronav. I think they're going to be a strong investment. Not short term, we can see an increase. I'm more thinking 4-6 months till 2021 down the line. I don't know what's going to happen after that, but these earnings right now, everything that's going on, is just going to add up, keep carrying over. I'm going to definitely start to see investors that don't really know about it yet, or they didn't know about it. I'm going to start to see price increases, what I think, and I'm already in there before other investors are. That's what I want you guys to be able to do as well. Now, all these analysts are also using oscillators, momentums, to predict the price that is going to get to. And this really shows that analysts are also expecting a positive result coming from the upcoming earnings report this year. So I want to see what you guys think about this. Let me know in the comments down below. But overall, these are my two companies, Euronav and Teekay, that I'm very bullish on. And I think we can expect some good earnings this year, good price increase. So let me know what you guys think down in the comments, and have a wonderful day.